And institutional investors have increased their gold positions by over 40% in the last 3 years. So maybe that's why the metal has outperformed the S&P 500 over the last 24 months, really over the last decade. But suffice it to say, things are beginning to accelerate. And, I think the worst thing you can do is get too caught up in the market daily moves, down 15 one day, down up 15 the next. The numbers are bigger, but the percentages really aren't. And if you look at what I said earlier, that in the last 213 days, we've seen gold go from 2,500 to 3,000. That's the fastest $500 price jump in history. But in essence, you're only talking, under a 15% or about a 15% gain, just over 50.
In today's news recap, Goldman increases gold forecast to $3,300 an ounce by year end. Goldman Sachs Group Inc. ramped up its gold price forecast to $3,300 an ounce by year end, citing stronger than expected central bank demand and solid inflows into bullion-backed exchange-traded funds. The bank's increasingly bullish view on the precious metal was shown by the new forecast from analysts Lina and Daan Struyven, who just last month upgraded their end 2025 price target to $3,100 an ounce. Official sector appetite could average about 70 tons a month this year, up from their previous estimate of 50 tons, they said in a note on Thursday. The precious metal has rallied 15% so far this year, extending strong gains last year that were partly fueled by the Federal Reserve's pivot to monetary easing. Prices this month breached the key psychological threshold of $3,000 an ounce for the first time, with investors seeking refuge in the haven asset as President Donald Trump's disruptive agendas on foreign policy and trade cloud the outlook for the global economy. The new $3,300 an ounce forecast reflects a pickup in purchases through the November through to January period, with central banks scooping up about 190 tons per month, the Goldman analyst said. There are also expectations that China may continue accumulating at a rapid pace for at least 3 years, they added. Central banks, particularly in emerging markets, have increased gold purchases roughly fivefold since 2022, following the freezing of Russian reserves, Thomas and Struyven wrote. We view this as a structural shift in reserve management behavior, and we do not expect a near-term reversal. Inflows into gold-backed ETFs had surprised to the upside, with renewed investor demand for hedges likely driving the expansion, the analyst said. They reiterated their view for 2 rate cuts from the Fed this year. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
SLV, that it got absolutely crushed in terms of short interest in a matter of an hour. In 1 minute, you saw, literally thousands of shares dumped onto the market, and just like that, maybe even more than 1 million shares, that drove down naked shorting PSLV. And the rumor behind it is that the reason they're doing that is to disincentivize not only investment in silver, but when there is a increase in demand in something like PSLV, they have to go out and actually purchase silver for the trust. And if you have all of this shorting of PSLV that is greater than the demand in PSLV, they don't have to go out and buy more silver. So they can short the share. And I was, looking at shorting. I found it interesting. And people should think about this in terms of the great taking, in terms of the difference between something like PSLV, which can be shorted, versus holding it yourself. This is SEC Rule 15C3-3. In the United States, the Securities and Exchange Commission regulates rehypothecation through Rule 15C3-3, which limits the amount of a client's securities that a broker-dealer can rehypothecate to 140% of the client's debit balance. So, they can take everything that you have plus another 40% and it can be shorted. So all of these shares that are then borrowed are shorted. They drive down the price. They have to, at some point, buy those shares back. But at this point right now, where there's so much demand in silver and they're still trying to keep the price down, this is a very dangerous time. And they're using PSLV as a tool to hold it down. I also found it interesting. I found a statement when we think of maybe the prospects of where silver could go from Donald Trump, and it stated 1/17/2017. Silver is the most undervalued asset on the planet. It's been money for all of human history, and it sits at $16.50 an ounce. Sad. So yeah, it's doubled since then, since 2017, and arguably still rather undervalued. And this is the way that they manage the price. Things like the ability to massively short PSLV to keep the trust from going into the open market to buy more silver, which pushes the price up.
In today's news recap, silver price remains below $34 after Fed rate decision. Silver price holds on to gains after a previous session of losses, trading around $33.80 per troy ounce during Asian hours on Thursday. However, the non-interest-bearing metal faces pressure following the Federal Reserve's interest rate decision. As widely expected, the Fed maintained the federal funds rate at 4.25% to 4.5% during its March meeting, but reaffirmed its outlook for 2 rate cuts later this year. This stance aligns with forecasts of slower GDP growth and higher unemployment, counterbalancing concerns over rising inflation in the United States, potentially driven by aggressive tariffs imposed by President Donald Trump. Silver, a non-yielding asset, may have found support as U.S. Treasury yields declined, with the 2-year yield at 3.97% and the 10-year yield at 4.24%. Meanwhile, bonds gained traction following the Fed's decision to slow the pace of quantitative tightening, citing concerns over reduced liquidity and potential risks tied to government debt limits. Silver lease rates have surged due to shrinking stockpiles, particularly in London, as silver flows toward the U.S. to capitalize on higher prices. Banks and traders lease silver to ensure short-term liquidity for trading or operational needs. This shift has widened price gaps between major markets, with spot silver up 17% this year, outperforming other commodities. Additionally, physical silver transfers from Canada and Mexico are strained by tariffs, further tightening supply. Growing fears of a silver squeeze could disrupt trade for months. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
Who knows as far as confiscation? I have a hard time believing that we'll see it again. You have JP Morgan as the primary custodian of SLV and GLD. It'd be much easier to take those two funds, the lion's share of gold and silver held in a couple of funds amongst the others they are in custody of, along with BlackRock, without going door to door to take what amounts to a drop in the bucket in terms of what the American public owns. And you have the Shanghai Gold Exchange and the gold accumulation programs that the government is running for the people through the Shanghai Gold Exchange. They're promoting gold in China. You look to Russia; they've slashed or got rid of the duty, if you will, I guess it's called, or any extra tax that the people have to pay to own it in Russia. That's gone. They're promoting it to their citizens. You have countries around the globe, even those that we would consider to be a step or two behind the freedom we find here, which is probably silly to even say that, but these countries are promoting it. It would be the death knell for the dollar and everything we stand for if we took gold from our citizens. And we already are having a hard time inspiring trust for people to take our treasuries. If we activated eminent domain and took gold from the public, it would be, I think, a very bad day for the United States and our prospects of retaining the center of free trade globally. So I don't think that'll happen. It's too easy for them just to take the ETFs, but that's speaking to jurisdictional risk. You could dig a hole in your backyard and become a midnight gardener if you're really that concerned about keeping it in your house. I get it. If you want to move it into storage, we've partnered with Brinks and we've worked with them for going on 17 years. I've never seen an ounce out of place, raise my voice for a second, or question anything I've ever seen there. I've taken part in dozens and dozens of audits with the third-party auditor. They do things the right way, and we have facilities in Canada, in Toronto, Vancouver, Montreal, in the United States, in Texas. We're the only ones there at this point right now. Miami, we're the only ones there. New York City, Salt Lake City, and Los Angeles. I choose to work with a company of that integrity, a Fortune 100 style balance sheet, 100-year-old company who has never had an attempted break-in in any of their facilities. In a world of imperfect choices, it's as good as I find. I would stay away from private facilities in strip malls that these things that they use a retina scan or whatnot. These small places that I just think that it lacks the security, it lacks the infrastructure. Certainly, you'd want to make sure everything is insured and whatnot. For me, storage is about knowing the location, having the ability to retrieve it, making sure that the assets are completely segregated and fully insured. I don't think that anything fits the bill quite the way that our Brinks program does. Well, like I said, there are easy ways to hide this stuff in your home, bury it. If you get past that and still need to use storage, contact us. I truly do believe that our storage program is by far the best in the industry. And I do believe that. And I'm not just grandstanding, whether it be through the way that we have a fixed rate program that others don't have. We have a safe deposit box program in Toronto and Vancouver that others don't have, and access to Dallas and to Miami that others don't have. That's just the beginning. Reach out to us. Our Brinks program, I believe, is as good as it gets.
What do you think of Schectman's take? Do you agree with him? Do you think the real all-time high of gold is higher? Is this all bollocks? Post in the comments section down below your honest price prediction for gold and silver, and check this video right here because it's a perfect fit for you. I'll see you on the other side.